Hey guys, today we are going to talk about the Airbnb versus DoorDash IPO. So I think these are like the two big IPOs at the end of 2020. I mean, the Airbnb one, I feel like everyone's been talking about it for like a couple of years now. Obviously, with the pandemic, things got quite delayed. It looked like they were maybe going to IPO in 2021, but it just, 2020 was really their target. They've been going for 2020 for a while. The pandemic obviously hit. It wasn't a great time for them to go public earlier this year with everything that was happening. Obviously they had to raise a bunch of money via debt, pay a pretty high interest rate on that debt. No one really knew what was going to happen with travel. And, it was kind of a crazy like March, April, May, June for Airbnb. So, things kind of turned around. People started to travel again. It ended up being a little bit of a benefit to, have kind of a private space instead of like a hotel. So things didn't actually turn out as bad as they thought they were going to turn out. The founder, Brian Chesky, he had a really good interview. I think it was with NBC or someone like that. He was saying like, we were a little bit too high on ourselves, and then, the pandemic hit, and, we got a little bit too low on ourselves. And then we kind of just realized, like, you just got to be, like, super stable. So that was kind of cool. A guy who's obviously been extremely successful now is a billionaire, is about to be more of a billionaire. And, he's kind of, realized some things in business very recently that, he might have never realized if we never went through this pandemic. So it's cool to see people who are obviously operating at a very high level, operating very big companies, billion-dollar companies that are in many ways game-changing in their industries. To see a young CEO of a company like that, talk about the pandemic and some of the learning experiences, and they shut down a lot of kind of like pet projects. They really focused on their core business, their core customers, their core hosts, all that kind of stuff, and it didn't turn out to be that bad of a year for them. They are going to have their IPO. Travel is picking up again. We do have a vaccine. There's a lot of people who are just like really, really looking to travel in 2021. They're fatigued, and they are going to be, booking, accommodations, the second that it feels safe, and it's probably going to be, one of the craziest travel times ever as soon as this thing gets under control and people get vaccinated. There's just a lot of people that want to make up for lost time, and Airbnb's going to benefit from that. So that's Airbnb at a high level. We're going to go more into it. We're not going to talk about financials because it's just a different topic, and financials are important. And actually, it seems like they're becoming less important when you look at some of these like valuations. But there's a ton of YouTube channels talking about the financials and going into EBITDA and share price and target and all that target share price, all that stuff, which is great. And definitely check those out because financials are a big part of how you assess a company. But we're going to kind of assess like just the business model from from a non-financial perspective, just looking at kind of qualitative factors. On the other end, you have DoorDash. Really, really, really cool story. Young dude. Probably around the same age as the CEO of Airbnb. I forgot the guy's name, but he has a really interesting story. I think his family came to California from China many, many years ago. They didn't have much money. I think they started a restaurant. I believe that he saw, kind of some of the challenges in that last step of delivery that very small businesses have. Obviously got a good education. I think he went to Stanford, seemed to meet some of his, co-founders or, people who were very early stage in the company. They saw an opportunity in the food delivery space, and it's not an old company. This company's been around since I think like 2012 or 2013. Maybe they raised their first round in 2014. Again, I don't know this exactly, so I apologize if some of the facts are not exactly aligned with reality, but more or less kind of in that era based on what I understand about them. and they really just started to grow. And obviously, DoorDash, if you live in a big city, you see those Dashers going around, with their bags, on the bikes or, in cars, taking food to people's doors. And it's become a lot bigger. Like, you're seeing it a lot more and more. And even like myself, I've been using DoorDash more. I don't know why. Sometimes with consumer behavior, you don't know why you're using it, but maybe you just heard about it, you tried it, you downloaded it, and then it ended up working out. I think it's cheaper than Uber Eats, or it just feels cheaper for whatever reason. I don't know. But yeah, I mean, I do use it myself. Something that even a year ago I was not doing. I was using Uber Eats more, and now I seem to be using DoorDash a lot more. Uber Eats just feels a little bit more expensive for whatever reason. Either maybe they charge more fees, or the restaurants charge more, or they charge the restaurants more. I don't know. But I do find myself using DoorDash a lot more than I did a year ago. And I don't know why. That just seems to be the trend. So two really, really interesting companies. Both have young founders, in their mid to late 30s. Both are in industries that have, were not around in the way that they are today 10 years ago. Obviously, like this food delivery app space is very new. It definitely wasn't around like before 2010, as far as I know, in terms of, like ordering on a mobile app, that kind of thing. And Airbnb's industry, yes, vacation rentals have been around for a very long time. People have been renting cottages wherever, but the way Airbnb does it, the whole industry was completely shaken up by Airbnb. So two really interesting companies, two really interesting IPOs. It feels like everyone and their second cousin has an opinion on these companies and the IPOs, and it feels like there's just a lot of excitement. Okay, so that could be a really good thing in the sense that the share price could go up, but it could also be a lot of noise. Personally, I don't really like to invest in companies like when there's just so much hype about them, like everyone's talking about them. It seems really exciting. People feel like they're going straight to the moon. Those aren't usually the companies I would be investing in. These ones are kind of interesting though. Especially Airbnb, and we'll talk about that a little bit. But yeah, so it really is a interesting time for the IPO world. And you think, it's a pandemic, the economy's horrible, all this stuff, and yet these valuations are just crazy. There seems to be a lot of optimism. It seems to be driven a lot by young investors. They don't seem to care that it's a pandemic. They don't seem to care that all these people are losing their jobs, the government's printing all this money, et cetera, et cetera. They just believe in certain types of companies, and they just put their money in it. And that's really cool. That's really interesting. It doesn't seem to be driven by these like big hedge funds as much as it was maybe even 5-6 years ago, not that long ago. So it's really interesting to see how all this stuff is changing. So let's talk about both these kind of business models at a very high level. So Airbnb is a company that the core business is to, is for people who want to rent their accommodations out to other people, right? So people who want to rent their homes, people who want to rent their apartments, and there's also kind of you can also rent like a private room, or you can rent like even like a couch like this one to someone. I mean. I would imagine, again, I haven't looked at their financials in details, but I would imagine that a disproportionately high amount of their revenue comes from those big home rentals, the ones where, people charge like $800, $1,000, $2,000 a night, even like $300-400. I don't imagine as much of the revenue is coming from the couch rentals for like $30 a night, or the private room rentals for like $60-70 a night. So they have some really, really nice properties on there. Their commissions on these transactions are very high. This is not a company, like when we compare it to a company like DoorDash, is going to have as much volume. Obviously, there's thousands and thousands and thousands of transactions happening on Airbnb each day, but would seem compared to DoorDash that this is a much higher margin per transaction, much lower transaction volume, and a lot more cost to service each transaction. So what do I mean by that? If someone is booking a property for $500 a night for a few nights, let's say like a week booking for $500 a night, I know that's not the majority of bookings on Airbnb, but there's a lot of bookings like that. Airbnb is probably taking, like 15% of that. So what's that, like 15% of 3,500? They're making like $500 commission on that transaction, which is it's a lot for a tech company, a company that's just an intermediary, a company that's just a website. That's a lot of transactions. A commission. I guarantee you, DoorDash is probably not making a $500 transaction, like in terms of their commission, not what the restaurant's making, but their commission. I would doubt that takes place ever. Maybe, but I would doubt it. They're way more of like a volume business. So Airbnb has a lot of really nice properties. They can charge a lot of commissions on those properties, and it's kind of a business that will continue to grow because the potential is all of real estate, right? So that's the thing I like about Airbnb a lot. Is I don't feel like their potential in terms of like the amount of properties that could be there, and especially the luxury properties, is nearly what it could be in the future. And the amount of platform adoption is still, it is mainstream in terms of from the guest side, but it's still something that isn't fully like optimized. I would say that I feel like there's a lot more room to grow. There's a lot of people I'd say in the middle age to older generation that are still just way more comfortable with hotels. And I don't feel like people in their 20s and 30s are as big on hotels as they are with Airbnb. So, I feel like as the younger generation gets older and, people who are, even under the age of 20, get to a point where they're booking their own travel, they are, traveling with their friends, traveling with their family, you're going to see just a higher percentage of the population book Airbnbs and that kind of stuff. And I do feel like a smaller percentage of the population will, as a proportion, will book hotels. And I think hotels know that, and that's why hotels push in a lot of these bigger cities to regulate Airbnb. Like if you look in New York City, or if you look at Miami Beach, like huge travel hubs in the United States, or many places like London or Paris, a lot of hotel lobbies are really, really trying to limit the Airbnb growth because it's really dangerous, because the Airbnb industry is very disruptive. It offers a very, very attractive alternative to hotels. You get your own kitchen in many cases, laundry facilities, living space, with a hotel room. You get usually it's just a couple beds. Now the hotel, you get kind of an experience, usually like you might have a pool and some amenities. You can have that in an Airbnb too, like in condos and kind of stuff like that, but maybe it's a little bit less common than a hotel to have those amenities. And sorry, we just got some background noise. We're in a big city, so you're going to hear some background noise sometimes. And so the hotels definitely do not want Airbnb to grow. That's a bad thing. They're in direct competition. They're not complementary goods. They're substitute goods and services. So there's a huge interest with the big hotel chains to limit the curve of Airbnb because there's no, unlike the hotels, Airbnb doesn't own anything, right? From a real estate point of view. I mean, I think now they're getting into that a little bit, or they were before the pandemic. Kind of as those side projects that they had to shut down a bit just to stop the cash bleeding. But Airbnb does not own 99.9% of the inventory on there, or have any sort of like profit share model with any of that inventory in terms of the owner. It's just commission based, right? So they can continue to add inventory at a way faster rate than the Marriotts and the Hiltons can add inventory, because for those big hotels to add inventory, they have to make all this capital investment. Airbnb doesn't have to do any of that. Airbnb just has to, get new hosts essentially, and that's what makes it so dangerous, because they can continue to grow, they can continue to take market share without having to spend as much, and it's really, really hard for hotels to compete in that sense. So we're at a point now where a lot of the big cities have already implemented Airbnb regulation. So we're kind of seeing the effects of that already, and it's not really been that much of a preventative measure. I mean, a lot of times they'll allow people to rent one place out, but that's how much most people were going to rent out anyway. And then what you're seeing a lot in the vacation rental markets is, Airbnb's competition, which generally in the past in those vacation rental markets, so we're not talking the big cities where they've dominated the past 10 years. Really, that's been a big growth. But the vacation rental markets, the cabin towns, the mountains, the rivers, the lakefronts, all that kind of stuff, those people who were renting in those markets, they used to rent primarily on a company called HomeAway, which is now VRBO. VRBO was around as well, but then essentially HomeAway bought VRBO, and then recently they just branded as VRBO, and Expedia actually owns those companies as well. So this is like they're kind of competing with Expedia's vacation rental brand. Also, Booking.com is huge in Europe, but also in a lot of other markets. But speaking to those like big traditional like let's say cabin towns or places like that, they used to either rent to repeat customers through their own website or just through direct relationships, or HomeAway / Vrbo / that whole like family of companies. That was like kind of their primary source maybe 7 or 8 years ago. Airbnb has aggressively expanded outside of cities and has taken a much higher percentage of the market share in those kind of towns, in the woods, by the rivers, by the beach, all that kind of stuff, right? So, and then those guys like HomeAway, Vrbo, Expedia, they're trying to take some of Airbnb's market share in the city. So Expedia now offers people to rent their apartments on there, and that's getting bigger as well. Booking.com launched its booking home platform. So all these guys are trying to get a share of the Airbnb market in the cities, and Airbnb has aggressively and successfully expanded to a lot of the vacation rental communities, right? Like those traditional places, those cottage towns, those cabins, like the communities that have been doing this for like 50 years, right? Unlike the cities where this short-term rental thing, this vacation rental thing was kind of a new phenomenon, and that Airbnb acted as a catalyst for. So it's really interesting to see. Now, in terms of its competition, Airbnb, I genuinely don't believe that VRBO, Booking.com, or the Expedia platform separate from VRBO, like their own website, from a vacation rental standpoint, is as strong as Airbnb, and I don't believe they're as well positioned to take over the market the way Airbnb is. Booking.com, the biggest reason is their platform is just a little bit more complicated. The payments system is not what Airbnb is. Airbnb took a lot of losses to get their payment system together. It was not like that before. They had a pretty good system, and then they became more mainstream. So then they had more transactions, they had some chargebacks, they had some issues. They didn't have control over their payments. You can read about this stuff online, and that was one of the reasons they lost a lot of money in 2019, and I think towards the end of 2018. I'm not sure. I know they lost money in 2018. I believe 2017 was profitable. 2018, I don't remember if they were profitable, but I think they may have started profitable, and then they might have started to lose money. And I think that's kind of when their mainstreamness, if you want to say, like just got like crazy, and they had all these transactions, and they lost control of payments. And that's the reason why Booking.com, they tried payments in a bunch of markets, but they don't have that same payments infrastructure as Airbnb. Airbnb has spent a lot of money to get to the point where they can actually manage the host payments. And with that, and the big implication, why is that important? What's the takeaway there? Is because there's so many people who just might have one property who are not able to process credit card transactions on Booking.com. They don't have a payment processor. They don't have any of that kind of stuff. And they don't, even if they did have that stuff or they got that stuff, then they don't know how to deal with, they don't know how to do like payment verification. They don't know how to do ID verification with payment verification to make sure there's no like fraud or chargebacks. They don't know any of that. So there's a lot of those people who just focus on Airbnb. And that's big because Booking.com, it's not going to get a lot more hotels on its platform, right? Like for the same reason we talked about earlier, it's because you don't have, it's so much harder for hotels to start up than Airbnb. So all these individual hosts who are just starting with one property, it's going to be way harder for them to get on Booking.com than it would be to get on Airbnb because of that payment verification. And Airbnb also does the ID verification as well, which is not as big a deal, but it's an added bonus because ID verification is important. But Booking.com, it's just built more for professional operators. Airbnb has become a lot more built for professional operators, but Booking.com it's just not as built for those like individual one or two property operators, right? VRBO, it's good, but younger people who are getting into this like Airbnb world, they also don't really like VRBO as much as people who are a little bit older who've been renting their places for a while. And that kind of signals to me that Airbnb is in a better position because I would imagine, and again, I don't have the data on this, but I would imagine that people who are renting properties out that are under 40, they're way more inclined to rent on Airbnb than to rent on VRBO, right? If I were to rank it in terms of the young people, I would say Airbnb, then Booking.com, then VRBO. Not to rent from. I'm not talking about the people who are like booking, because that's important too. But I'm just talking about the properties on there. And why is that important? It's because these companies, they're really competing for the best inventory. They have the best inventory, then the customers will come. If the customers will come, that's where they get their money, right? So the supply side of these companies is as important as the demand side. Now, so it's a little bit about the Airbnb industry. DoorDash, also a very, very interesting industry. Now, the thing with DoorDash that I don't think is as attractive as Airbnb is that they don't have as much competitive advantages in the sense that the barriers to entry feel like they are a lot easier in that industry, right? Because the rest, I mean, what do you really have? You have obviously the restaurants, and then you need like the consumers. Now the consumers, you can just kind of, there's ways to just, increase your consumer base, right? It's a much lower risk industry in the sense that like there's no, I don't imagine there's going to be like that much like chargeback issues, or if there's chargeback issues, they're not like several thousands of dollars. So they can kind of just like a new company could kind of come through and just grow pretty quickly. You have big brands like Uber Eats backed by huge funding that are right there at your door. I do feel like Uber Eats and some of these other competitors, I do feel like they are they have a way higher likelihood of taking DoorDash's market share than a company like Booking.com or Vrbo has in taking Airbnb's market share. I don't feel like DoorDash has the scale now. It's got a great like restaurant partner network, and then you also have a really great brand in the sense that a lot of consumers use it. But I don't feel like it's as safe as Airbnb would be. Airbnb's gone through a lot of pain. They had a lot of issues. If you can really tell the story just looking at their financials. We're not going to go into the financials, but you can just kind of tell. And that industry is a lot more low margin, and they've never made a profit. Okay, so DoorDash has never made a profit. Airbnb has actually made a profit before, right? So Airbnb has been profitable as a standalone company. And then obviously they got into all these like kind of side businesses. They started selling experiences, all this kind of stuff. And then they just invested in growth, and then they became unprofitable again. But they were profitable at some point in the not too distant past, and they chose to kind of be unprofitable as a result of like wanting to go through like some hyper growth phases, right? Whether that was a good decision or not, they clearly learned from it. They shut some of those like side businesses down, and they kind of now they're very focused on their core offering, which is what made them a great company to begin with. DoorDash, I do believe they are doing some very innovative things. I believe during the pandemic, they allowed some, like I guess some restaurants were shut down, but then they had like some kitchens available for people to go and make, kind of cook on their own and deliver on DoorDash. I do think that there's a lot more like individual chefs who are maybe thinking, I can just do this on the side. Maybe they're not full-time chefs. They're just doing this on the side, and then they offer, stuff on DoorDash. And I think that could be a big growth opportunity for them. The fact that there's people who, are very good at cooking certain things, and they're not restaurants, and they don't have as much capacity issues, or let's say opportunity costs, because they're not worried about like in-person dining and making sure they can like service all sorts of demand. So I think there's a lot of opportunity there. It'll be, from what I've heard, people who know what they're doing say the business model is solid. They say that there is going to be profitability at some point in the next few years. I know the DoorDash CEO is emphasizing, profitability very, very soon, because I think people need to see this company make money. People need to see this business model make money. Now, the scale of DoorDash is obviously, from the transaction standpoint, is way higher than a company like Airbnb. It's very, very pandemic proof, and it's also like as a result of this pandemic, like it's a lot of people's habits have changed. A lot more people are working from home, not just for the pandemic, but also permanently. So as a result, when people work from home, unlike if they go, to like a workplace where they're just going to go eat at like a food court in a building, or if it's a more rural area, like they might have like a local place they like to go for lunch, to go grab a quick, bite. A lot more people when they're working from home are going to want to be ordering from, they're just going to say, I don't have time to cook. Like, I just want to order from DoorDash or something like that. So as a result of some like permanent changes in the way our society functions, DoorDash will really benefit from it, because they will take revenue from like the food courts, in those big office towers, as well as just local restaurants that service let's say the lunch crowd, the business lunch crowd, and some of that revenue will go to DoorDash, and that'll continue to happen, and that'll be a trend that happens more and more often. Now, is that trend being overvalued? Is that already built into whatever the share price is? I don't know. It's hard for me to say, but it's possible that things go back to normal more than even we expect, because there's a lot of people out there who are saying, oh yeah, the world has changed forever. And yeah, it has. Obviously, things don't stay the same. But how much has it changed? How many people will permanently, truly work from home, right? Will companies start to feel like, okay, that, working from home is great, but, there's just certain efficiencies from everyone being in the same office, working together, company culture, company morale. So right now, the reason people are working from home is because in many cases, like, we don't have an option. We have to social distance, stay safe, do what the authorities are saying, that it's not an option for most people, like if their city's in lockdown or whatever. But let's say, it is an option. Is that still going to happen? So in conclusion, both these companies are really interesting. They've come a long way in a relatively short history. Airbnb was founded, I believe, in 2007 or 2008, kind of in that range. DoorDash actually around 2013, I believe, in that kind of time frame. So both have come a long way. Both are worth billions of dollars, clearly, and it's going to be really interesting to see what happens to both these companies. I think you'll see a lot of activity potentially, some big fluctuations in those first few hours and few days, and then things should start to revert to where the stock will likely kind of be for a bit of time once the market kind of balances. But I wouldn't be surprised if you see these stocks bouncing around a lot, especially Airbnb, but DoorDash maybe as well. So we'll see. We'll see if the market truly has overvalued these companies or whether they are as good as kind of what everyone, not everyone, but a lot of investors project them to be. Personally, I'm going to wait and see what happens with both these companies. I don't think I'll be putting my money in DoorDash. Not that it's a bad business. I just don't know I just don't understand the business model in terms of how it scales as well as maybe I would understand Airbnb a little bit more. That just makes a little bit more sense to me. And the fact that Airbnb has been profitable before is also very, very reassuring as an investor. I wouldn't buy either of them now just because I don't like buying stocks when there's just too much hype around them. I like to buy stocks where there's no hype around. Like I loved, for example, Norwegian Cruise Lines when it was at like $8 a share. I love Boeing when it was at like $100. That is an exciting opportunity to me. These stocks are exciting in the sense that they're going to be fun to watch. It's going to be entertaining. Would I put my money in them today? Probably not, just because I don't believe in this putting money into something that investors are going to hype up like crazy. But I will be watching these stocks, and if they do kind of hit a level that seems reasonable and seems to be kind of a good reflection of where these companies are today, especially Airbnb, I'll be a lot more interested in investing in them because they can definitely have a lot of potential, and both these companies are set up for not only where the world is today, but also where the world is going. So it'll be a lot of fun to watch what happens with these companies.